This is the Dow Jones from 1928 through April of this year. So,
Huh.
I mean, it's almost comical, but
Yeah.
and there is, I think there's an argument to be made that maybe it's not sustainable, but I don't know if that's true. I mean, maybe it is. If it's all dependent on growth, it doesn't really matter where you are on the spectrum. The power of compound interest would lend itself to me to believe that the trajectory would keep going up, but who knows?
That is interesting, like how steep it's gotten in, just the past, I don't know, 10, 15 years.
Yeah, so like right here is this is 2008, right? Is
Yeah.
the which is and look, people we just talked about how people always freak out in recessions and rightfully so. Is the Dow Jones went back to levels of, from the 90s. You're talking
Yeah.
about erasing 10 years of potential returns. But of course, what goes along with this dramatic crash is the best buying opportunity probably in our lifetime, right?
Right.
The
Yeah.
problem is if you're not able to keep your job, then you can't buy stock. You can't contribute to invest. So, what ends up happening is if you're a young person today, as long as you can keep your job, which maybe is it's a big given, but if you can keep your job, it's almost like a recession is the best thing that can happen to you financially because all the stocks are going to go on sale if you are disciplined about investing, which I would recommend making it as automated as possible so you don't have to think about it. Then
Right.
you're essentially going to buy a bunch of stock at really low prices. And then if you look what happened here, like imagine if you bought a bunch of stock in 2008 and then you look at the price now. I mean, you can capture outrageous returns, um, provided you're able to do that. Now, obviously, the problem is in a recession is that a lot of people are losing their jobs, so it's not possible for everyone to do that.
Yeah.
Um, but yeah, my takeaway is that uh, I can't control any of these swings. Doesn't matter. Doesn't matter what we say on this podcast. It's completely out of our hands. So you might as well try to ride the wave, right?
Yeah. And then I've heard arguments like, because there were, up until what, last fall or whatever, the end of last year, uh, there were like super high valuations. And so a lot of pundits are saying the next, 10 years, the average expected average returns are going to be lower because like stocks have become so expensive right now. So I don't know. Who knows? But,
Maybe.
that's why it pays to have a long term horizon. It doesn't matter.
My response to that is maybe.
Yeah.
I don't know, and you know what? That pundit doesn't know either. He's just guessing.
Right.
So, which is another. This is maybe a different discussion about why I'm a believer of passive investing and not actively managed funds because I'm not necessarily going to trust whatever fund manager to pick those funds and beat the market because most of them do not beat the market, and you're
Right.
paying a premium for them to try. So
Yeah.
yeah, maybe, but I mean, people are always predicting the doom and gloom. So maybe it happens, maybe it doesn't. Uh, you can't control it either way. So all you can do is put yourself in the best possible position. I mean, think about the alternative. Like, let's say you truly believe that's going to happen. Then you're going to change your strategy today because why would you hold something that's worth $100 when next week it's going to be worth 50? So then
Right.
there's going to be pressure on you in some way to sell or get out of the market or whatever. And then what happens if the market goes up another 30%? I mean, you're going to feel horrible. So
Yeah.
this is what is called trying to time the market, and like you're going to spend so much energy and stress trying to figure that out, and then you're probably still going to get it wrong. Whereas all you have to do is leave it in there, literally do nothing, and you're going to do better anyway. So I don't know. I don't know if it's going to crash today, tomorrow, or next year, or whatever. But I can tell you at some point there's going to be another crash because if you look historically, that's always what happens.